Hello everyone, I welcome you in the virtual classroom of business environment. We are discussing unit number 3, Indian tax system, and in that we are discussing types of taxes. There are two types of taxes, direct taxes and indirect taxes. And we have already completed direct taxes and now we are moving towards indirect taxes. In last lecture, I told you that there are three parties connected in a tax payment system. The one is tax collector. Generally, it is a government. Second one is a taxpayer. And third one is a tax bearer. Taxpayer is a one who pays to the government, and tax bearer is a one who really bears the tax burden. In case of direct taxes, taxpayer and tax bearer both are one. That is why they are known as a direct tax. But in case of indirect tax, taxpayer and tax bearer both are different. Taxpayer is generally manufacturer and tax bearer is generally consumer. So there is three different parties in indirect taxes. That is why it is known as a indirect taxes, because the payer is not a bearer. Payer doesn't bear the tax burden. Now let us see in detail. Indirect tax is a levy. Levy means a payment collection where the incidence and impact of taxation do not fall on a same entity. The burden of tax can be shifted by taxpayer to someone else. See, here it is written, the tax burden is shifted by taxpayer to someone else. Taxpayer is a manufacturer and he shifts his tax burden to the wholesaler. Wholesaler shifts his tax burden to retailer and retailer shifts its tax burden to the consumer. So finally it is the consumer who bears the tax burden. Indirect tax has the effect to raising prices of product on which they are imposed. Indirect taxes are generally levied on the product and services. On those products, when the indirect taxes are charged, those products price will definitely increase, because the tax is a cost from the viewpoint of manufacturer, and when cost increases, price has to increase to cover up the cost and earn profit. So on any product and on any service, when taxes are imposed, price will definitely increase. For example, customs duty. Customs duty is a tax charged on import and export. Second one is import duty. Third one is central excise duty. Excise duty is a tax on production. Now it is cancelled and it is replaced by GST. Service tax, that is a tax on the service, that is also cancelled and replaced by GST. And value added taxes are the examples of indirect taxes. So what you need to remember in indirect taxes is any tax that is levied on the product and services that are known as indirect taxes, and any taxes which are levied on the income of a person, that are direct taxes. Now let us move ahead to the advantages of indirect taxes. There are 8 advantages of indirect tax. First one, the poor can contribute. Second one is convenient. Third one is broad based. Fourth one is easy collection. Fifth one is non-evadable. Sixth is elastic, then equitable, and the last one is check harmful consumption. Now let us discuss in detail. The first advantage is the poor can contribute. In case of direct taxes, as I told you that income tax is the classic example of direct tax, and in income tax, poor are exempted because they are having a low income. But in case of indirect tax, everyone has to pay the tax because they are purchasing commodity. So in direct taxes, poor cannot get chance to contribute, but in case of indirect taxes, poor can get chance to contribute. They are the only means of reaching the poor. It is a sound principle that every individual should pay something, however little, to the state. It is said that whoever is a citizen of country, they should contribute towards the development of a economy. Why? Because they are part and parcel of economy, so they must contribute. So in case of direct taxes, poor are exempted, so they cannot contribute. But in case of indirect taxes, as I told you earlier, that even poor are purchasing something and something. Yes or no? So when they are purchasing, be it a salt or be it a matchbox, in that also the tax are collected. So by that way, poor can contribute, poor are paying the tax, and it is the only indirect taxes by which government can reach to the poor. In direct taxes, government cannot reach to the poor. The poor are always exempted from paying direct taxes. They can be reached only through the indirect taxation. As I told you earlier, that in income tax in our system, Indian economy also, that we are having exemption limit up to 5 lakh of rupees, and generally they are considered as a poor class. So in direct taxes, poor are exempted, and so it is only indirect taxes which left for government to reach to the poor. Then second advantage is convenient. They are convenient to both the taxpayer and the state. Convenient for both of the parties, for the taxpayer and for tax collector as well. Taxpayer and the state. State is a tax collector. The taxpayer do not feel the burden much, partly because an indirect tax is paid in small amounts and partly because it is paid only when making purchases. But the convenience is even greater due to the fact that the tax is price quoted. See, three reasons are given here that why indirect taxes are convenient. First of all, that the taxpayer do not feel much burden, partly because indirect tax is paid in small amounts. If we compare with the direct taxes, they are the rate which are 10%, 20% and 30%. If you see the absolute amount of tax which runs into thousands and lakhs, 15,000, 50,000, 1 lakh of rupees and the like. So whenever direct taxes are charged, a bigger amount is paid at one point of time only. But in case of indirect taxes, the rate of indirect tax is very low. You are purchasing so many things and the rate of tax generally moves from 5% to 18%. If we talk about Indian context, then maximum rate of taxes which are levied under GSTs are 28%. So 5% to 28%, and that too you need not to pay at one point of time. You are making purchase of so many different commodities. So 1 rupee, 2 rupee, 3 rupees are the amount of tax that we are paying. So the amount of tax payment is very much small. That is the reason it is convenient. Then second reason, partly because it is paid only when making purchases. Only when making purchases. See, when we are making purchases, when it is affordable to us, yes or no? So when we are having the abundance of money, when we can afford, at that time we are making a purchases, and at that time we are making a payment of taxes. But in case of direct taxes, what happen? When you receive the salary, then before you enjoy your salary, government cuts TDS, tax deducted at source. So it is not convenient. At that point of time, you may be in need of money, there is an emergency at your home, but you cannot do anything, the tax payment is compulsory. But in case of indirect taxes, suppose you don't have money, so you are not going to purchase anything, and simultaneously you are not going to make the payment of taxes. So that is the second reason that indirect taxes are convenient. And the third reason, but the convenience is even greater due to the fact that tax is price quoted. Price quoted simply means that tax is not known to the public. Public is paying the tax, but the tax is price quoted. So when we are making payment, we don't feel that we are making payment of taxes. So it doesn't pinches us. Unknowingly we are making the payment. So in unknown, there is a conveniency. So there are three reasons we have discussed. First one is there is a small amount of tax. Second one is only when making purchases, and third one is tax is price quoted. Due to these three reasons, indirect taxes are convenient. It is wrapped in the price. It is like a sugar coated quinine pill. It is a pill. Pill means a medicine, and no one likes a medicine. But if you coat it with a sugar, then the person who takes the medicine will not feel that he is taking a medicine. So, indirect tax is like just that only. It is a price quoted means we are making price and we feel that we are making the payment of price because we are enjoying the goods or services. But actually, what is the reason? You are making payment of price and you are making payment of taxes. Thus, a tobacco is not felt when it a tobacco tax is not felt when it is included in a price of every cigarette bought. It is convenient to the state as well as which can collect the tax at the ports or at the factory. Just because the tax is price quoted, it is very much convenient for the taxpayer and for the tax collector. Taxpayer, why? Because when they are making the purchase or at that point of time there is a tax payment, no experts are required to understand the tax system and to make the tax payment. And from the viewpoint of state, they are collecting the tax from the manufacturing point of site only, so they need not to visit, they need not to contact to each and everyone for the collection of tax. Then third advantage is broad based. Indirect taxes can be spread over a wide range. Very heavy direct taxation at just one point may produce harmful effects on social and economic life. As indirect taxes can be spread widely, they are more beneficial and suitable. Broad based simply means there is not only one point of time, one incidence when taxes are charged. There are multiple incidents and multiple areas where indirect taxes are charged. As I told you in the introductory part, that indirect taxes are levied on product and services. And if we see, then there are n number of products and services in the economy. So government has multiple choices for collection of indirect taxes. But in case of direct taxes, there is only one incidence, that is income and salary. And due to that reason, the rate of tax is heavy, which results into adverse effect in a social and economic life. That is written here. Social and economic life will adversely affected. Economic life means you will not have your salary enough to enjoy your life. You will not may have the savings because of the tax payment, and due to that reason your social status may suffer. But in case of indirect taxes, there are multiple points of tax payment. So 1 rupee, 5 rupee, 15 or 1000 rupees you are making payment at a different point of time. So they are broad based. Then next advantage is easy collection. Collection takes place automatically when goods are bought and sold. A dealer collects the tax when he charges a price. He is an honorary tax collector. Easy collection means there is no hurdle in the tax collection. In case of direct taxes, we need to contact to the every taxpayer, but in case of indirect taxes, the government contacts only the manufacturer. Say for example, government charges 100 rupee on any commodity, so 100 rupee government will not collect from the consumer, government will collect from the manufacturer only. Now what manufacturer will do? He will collect it from the dealer. By the way, it is his duty to sell his product to the dealer, and so he will collect from the dealer. And now what dealer will do? Dealer will collect it from the retailer, as the tax is quoted in a price. So when he will collect the price, he is collecting the tax. And what retailer will do? Retailer will collect from the consumer. So the channel is automatic. Government collects from the manufacturer, manufacturer collects from the dealer, dealer from the retailer, and retailer from the consumer. Government is the authorized person from a tax payment, from the tax collection, and manufacturer, dealer and the retailer are the honorary tax collector. Just because they are part of the system, they are indirectly collecting the tax, and by that way they are playing the role of tax collector. So from that point of view, we can say that there is a easy collection. Then next advantage is non-evadable. Non-evadable means not avoidable. It is compulsory and everyone has to make the payment of taxes. They cannot be evaded as they are a part of the price. They can be evaded only when the tax article is not consumed, and this may not always be possible. If you don't want to make the payment of tax, it is only possible when you don't make the purchase of commodity. If you are purchasing, means you are paying a tax. There is no way out. Say for example, a price of any commodity is 100 rupees, then generally what happened that for the sake of simplicity, we are assuming that 90 rupees is a price and 10 rupees a tax. No one will told you that 100 rupee 90 rupees is a price and 10 rupees a tax. You has to make the payment of 100 rupees. So by that way, there is an automatic payment of tax of rupees 10. So that is non-evadable. If you don't want to make the payment of indirect tax of rupees 10, it is only possible if you don't purchase that commodity of rupees 100. So there is no way out to avoid, to escape from the payment of the indirect taxes. Then next one is elastic. They are very elastic in yield imposed on necessaries of life which have an inelastic demand. Indirect taxes are charged on each and every product, be it a necessaries good and be it a luxurious good. If we talk about necessities good, which are necessary of life, then the demand of that product is inelastic. What do you mean by inelastic demand? Inelastic demand simply means when price increases, demand will not reduce. According to law of demand, when price increases, demand decreases. But for inelastic product, if price increases, demand does not decrease. Take an example of salt. If 20 rupees salt is sold for 100 rupees, then also we are not going to reduce the consumption of salt because it is necessary. Getting it? So even if price increases, demand doesn't decreases. So what is written here? That tax is charged on the necessaries of life, so it has to be purchased. Indirect taxes on necessaries yield a large revenue because people must buy these things. By that way, government is of sure that people has to purchase it definitely, and by that way government can have the earning of the tax from the necessaries of life. In case of luxuries good, what happened that people may not purchase if they don't afford it, but in case of necessaries, it is compulsory for them to purchase, and by that way it becomes compulsory for them to make the payment of indirect taxes. So the revenue in case of indirect taxes for necessaries of life will be in large amount. Then next advantage is equitable. Equitable, we have seen canons of taxation, and one of the canon was canon of equity. According to canon of equity, rich should pay the higher tax and poor should pay the lower tax. That principle is very well implemented in indirect taxes. What happened in indirect taxes? In luxurious goods, the amount of indirect tax, the rate of indirect tax is higher, and in the necessities of goods, the rate of indirect taxes is lower. Necessaries of goods are those products which will purchase by rich and poor both, but mostly by the poor, and luxurious goods are only purchased by rich. So government is collecting higher taxes from luxurious goods from rich, and government is collecting lower taxes from the necessaries of goods from the poor class. So from that point of view, we can say that indirect taxes are equitable. That is what written here. When imposed on luxury or goods consumed by the rich, they are equitable. In such cases, only the well-to-do will pay the tax because the luxury goods are purchased only by the rich class and rich can afford the higher amount of tax. Then next advantage is check harmful consumption. By being imposed on harmful products, they can check consumption of harmful commodities. That is why tobacco, wine, and other intoxicants are taxed. Harmful consumption means what? All those products which is harmful to the health of the consumer that should not be consumed by any of the person. But as we told that India is an independent country, everyone is having a freedom, so no one can restrict to do anything, even if it is harmful to your health. So what government generally do by indirect way to reduce the consumption of harmful commodity, government charges the higher tax on the harmful products. Take the example of tobacco, wine, and other intoxicants. The prices of these products are very high, and what government think is when price increases, demand reduces. So just because the higher prices of harmful consumption, which may result into lower consumption, so by that way we can say that government is taking care of the health of the people. So this is all about the advantages of indirect taxes, and now we are moving towards the disadvantages of indirect taxes. The disadvantages are regressive, uncertain, raising prices unduly, uneconomical, no civic consciousness, and harmful to industries. Let us see the first disadvantage, that is regressive. Indirect taxes are not equitable. You may think that this is confusing because in advantage we have seen that indirect taxes are equitable, but here it is written that indirect taxes are not equitable. Well, that is about the matter of perspective, that is about the viewpoint. From let us see what is the from which viewpoint indirect taxes are regressive. For instance, salt tax in India fell more heavily on the poor than on the rich, as it had to be paid at the same rate by all, whether a rich man buys a commodity or a poor man. The price in the market is same for all. The tax is wrapped in price, hence rich and poor pay the same amount, which is obviously unfair. They are thus regressive. In the introductory part of this unit, we have seen the types of taxation. Three types of taxations are there: progressive, proportional, and regressive. Regressive taxation are those which means that income increases, tax decreases. Here what is written that, take an example of salt. Say for example that this tax on the salt is 10 rupee. Tax on the salt is 10 rupee. Now this 10 rupee has to be paid by the rich and it has to be paid by the poor. Now if you see that value of that 10 rupee, then it is different from rich to the poor. 10 rupee may feel like 100 rupee for poor, and 10 rupee may feel like 1 rupee to the rich. So the feeling, the value for the 10 rupee is different from rich to the poor. So in that way, poor is making the payment of 100 rupee and rich is making the payment of 1 rupee. In sense of feel, we can say like this: the rich income is more and they are paying 1 rupee, poor's income is less and they are paying 100 rupee. So income increases, tax reduces; income decreases, tax increases. So in that point of view, we can say that indirect taxes are regressive. Then next disadvantage is uncertain. Uncertain means the government does not know how much revenue they are going to collect from the indirect taxes. Unless indirect taxes are imposed on necessaries, we cannot be sure of the revenue yield. As I told you earlier that there are two categories of goods and services. One are the necessaries and second one are the luxuries. Necessaries are the compulsory purchased by everyone and luxuries are the optionally purchased by the population. So if tax is charged on the necessaries, then there is a guarantee of the revenue. But if the taxes are charges on the luxuries, then you cannot predict how many products are going to sell and how many collection will be there from the luxury commodity. In case of goods with an elastic demand is generally of luxury goods only, where the price increases, demand reduces. Take an example of air conditioner. If the price of air conditioner is 50,000 rupees, then if it increases from 50 to 60,000 rupees, some may postpone to purchase the AC because the price increases. They are the luxury, they are not the necessary. So elastic demand means when price increases, demand decreases. In case of goods with an inelastic demand, the tax might not bring in much revenue. The tax will raise the price. Because tax is charged, price will increase, and when price will increase, demand will reduce. Tax will raise the price and contract the demand. Here contract means shrinkage. Shrinkage means it will reduce the demand. When the thing is not purchased, the question of tax payment does not arise. If the product is not sold, then how government can collect the tax? That is a question. Yes or no? So that is the uncertainty in a tax collection, uncertainty in a tax revenue. Then third one is raising prices unduly. They cause the price of an article to rise but more than the tax. A fraction of money unit cannot be calculated, so our middleman tends to charge more than the tax. This process is cumulative. Tax has a direct effect, indirect tax has a direct effect on the prices of a product. Say for example, the price at a factory gate is 90 rupees and suppose government charges the tax 10 rupees. Then the selling price will become 100 rupees. Now suppose government increases the tax from 10 to 20, then the price will become 110. So what a manufacturer will do? Manufacturer at the factory gate will charge the price at 110. In 110 he will sell to the wholesaler. Now what wholesaler will do? He will have an argument to protect himself. He will sell this 110 rupees product in 120 by giving argument to the retailer that government has increased the tax. Now what retailer will do? Retailer will sell in 130 rupees, giving argument to the final consumer that government has increased the tax. But actually how much government has increased the tax? It is only 10 rupee. When the tax was 10 rupee, the product was sold in 100 and the tax increased to 10 rupee more. The actually the price should be 110, but price has become 130 because of the cumulative effect. Cumulative means manufacturer has increased price, wholesaler has increased price, and retailer has also increased the price. So due to this cumulative effect, in indirect taxes, the price of the product raises unduly more than the increase in a tax. In this example, increase in a tax is only rupees 10, but increase in a price of product is 30 rupees. So that is more than increase in a tax. So that is the disadvantage of indirect taxes. Then next one is uneconomical. Uneconomical means the cost of indirect taxes are more as compared to the revenue yield by the government. The cost of collection is quite heavy. Every source of production has to be guarded. Large administrative staff is required to administer such taxes. This turns out to be costly affair. If we talk about direct taxes, then there is only one incidence, that is a salary and income. So less staff is required for collection of direct taxes because there is a one-to-one contact between taxpayer and tax collector. But in case of indirect taxes, the incidence of tax payment, there are so many. The indirect taxes are charged on n number of goods and service. So whenever and wherever this n number of products are produced, at each point government has to be ready for collection of tax, so which increases the staff required, and as a result increases the cost of the collection, because more the staff, more will be the salary cost and more will be the ultimate cost of tax collection. So from that point of view we can say that indirect taxes are uneconomical. Then next one is no civic consciousness. These taxes do not develop civic consciousness because many times the taxpayer does not even know that he is paying a tax. The tax is concealed in a price. When civic consciousness will be developed, when you feel that, when you know that you are making payment of tax, and from that tax the country is developing, the infrastructure is developed in a country. But in case of indirect tax, most of the people don't know that they are making the payment of tax. If we talk about literacy rate, then from the education we can say that most of the people don't know that they are paying the tax. As they don't know they are paying the tax, how they can feel that they are the part of the progress of the India? So just because they cannot take pride, why? Because indirect tax is a price quoted. They just feel that they are purchasing the goods, but they don't know they are making the payment of taxes. Then next one is harmful to industries. They discourage industries if raw materials are taxed. This will raise the cost of production and impair their competitive capacity. Harmful to industries means what? That if the price of raw material will increase, and when the price of raw material will increase, when indirect tax on raw materials will charge. So price of raw material will increase, which increase the cost of production, which will increase the price of the product, which leads to reduction in a demand. So what happened that producer cannot able to earn sufficient profit, which will discourage them to undertake the productive activity in a economy. So by that way indirect taxes are harmful to the industries. That is all about the advantage and disadvantage of indirect taxes. We are keeping our lecture here. From next lecture we will discuss the tax revenue of central government and state government. Till the time, have a good day.